Hi guys, welcome back to ASX Market Watch. Thank you so much for joining me today. We've got a heck of a lot to get through, especially because there's so much happening in the world markets at the moment, especially down under Australia where we've got the All Ordinaries in Australia. A lot is happening, especially over this last week. Cannot wait to share this stuff with you guys. It's fantastic, but let's just jump straight into it. You guys already know the deal. We look at the world charts, we look at where the world is heading from a chartist point of view so that you can supplement that with whatever tools you use already. Maybe use fundamental analysis, maybe use broker reports. This is a great way to supplement it because we believe that 3 out of 4 stocks will follow the overall market. Now the overall market being, of course, the index. Now, down under Australia, guys, as I said, we're quickly starting there, and man, has a lot happened this week. My goodness, it's been crazy. This is a chart of the All Ordinaries in Australia, which is an index of all the stocks on the Australian market. But first of all, in order to show you this chart, I need to show you another chart, and that would be the one that we looked at last week of the Shanghai Index. Now, the Shanghai Composite Index is China's main index, guys. And China is what a lot of people believe is driving Australia's growth at the moment. Now, to explain that, I mean, really, it's not too complicated, but really, basically, we've got 2 different economies pretty much in Australia at the moment. One is resources, and the other is everything else. So, resources is absolutely kicking butt, guys. And even if we just have a quick look at the materials index, look at that. Beautiful uptrend. Loving that uptrend. Obviously, it's starting to falter a little bit, but we'll get into that in a bit more detail quickly. As we were saying, the Shanghai Index, last week we said it was in a downtrend, it was in a medium downtrend, it was in a short-term downtrend as well. That is exactly what we called last week. And now, what happened over this last week was the investments of Shanghai went down while the inflation of Shanghai or of China went up. So basically this is bad news. And again, it wasn't a massive difference, but still it did happen, and it started to spook Australian investors out. Why? Because all of our resources, a lot of them anyway, like the majority of them, go over to China to fuel their building and all their and basically what they're investing in at the moment. And if that's starting to falter, then that could start to falter our resources sector as well. At least that's the idea behind it. So Shanghai is heading down, as we said, and after that news came out, shablam, we had a massive down day, and obviously the downtrend is continuing in China. I'll just get rid of this larger one. As you can see, on a shorter term basis, it's definitely crossed the uptrend line, so we're still definitely in a downtrend in China on the Shanghai Composite. Now, how does that affect the All Ordinaries? The All Ordinaries, as you can see this chart here, we were basically still in our zone, which was our target zone. We were looking at anything over 4,900. Now it went straight into that area of 4,940, but then it totally reversed. So that was the day that that investment news of China came out. Basically, all the figures there, and that's basically what's spooking the investors out, because they feel that if our resources sector starts to falter, then the rest of our economy can't really hold it up, because everything around resources at the moment is doing well, but everything else is sort of lagging behind, guys. And again, you can see that in the charts if you look at the other charts. I mean, if we just compare it to the All Ordinaries Index, as you can see, this is information technology is the red line, and as you can see, it's well underperforming the All Ordinaries, which is the blue line here. Pretty much the same for anywhere. This is the financials index, well underperforming the All Ordinaries, which is the blue line there, guys. So this stuff is not rocket science. Consumer discretionary, all of these sectors around Australia, they are underperforming the market, except for materials. Look at that. It's kicking butt, guys. But that's what people are afraid of. They're afraid that the materials sector might start to falter. So that's the idea behind that. Obviously, it pays to keep an eye on China, and that's what we did last week. We called the downtrend. Obviously, it's been in downtrend for a little while already. But obviously the news came out after that, after we call that fact. So guys, not a lot going on. Obviously the All Ordinaries, we haven't got a confirmed downtrend in the All Ordinaries yet, and we'll just have to wait and see for that one, guys, because all we're looking for is a crossing of the trend line here, and then a little zigzag pattern down. Now there's still a lot of support on the All Ordinaries. We've got support at 4,800, we've got support at 4,700, 4,650, or 4,600 roundabouts. So there's a lot of support levels on the way down, but obviously and we still haven't had our exit signal yet, so from the top of this market. So that's what we would be keeping a close eye out for. Obviously it has met its targets, as we said last week. So that's Australia, that's Asia. Loving those two things. Obviously, as I said, there is a lot happening. Dow Jones. The Dow Jones is next. Now, guys, I've got a bit of a love affair with the Dow Jones index at the moment because it's so beautiful, man. This chart is just awesome. Obviously, if we were to follow Elliott Wave goes 1, 2, 3, 4, 5 waves up and then 3 waves down, guys. It's not rocket science, very simple stuff, and you can keep it very simple if you do study it in more detail. But we're still in that uptrend. That, as you can see, I'll just try and enlarge that. We're in our last wave, which is the 5th wave on the Dow Jones, and have we had any inkling of an exit signal? No, not even close, guys. This uptrend is just kicking butt. It's loving it. And actually, if I were to, obviously, as you can see, I've got this new tool, which I'm using, this one here. The red line is the Dow Jones index, and the blue line is the All Ordinaries. Again, guys, as you can see, how much is the Dow Jones outperforming over a year the All Ordinaries by about 10%, guys. So really, I mean, it's a good time to be in America, even though whatever's happening over there, the charts are telling a beautiful story. So can't complain. And now, I mean, really, there's nothing more to say apart from if we were to look at a target, guys. Let's have a quick look at a target for our Dow Jones. And, well, we're in the zone. I mean, there's no doubt about it. We're in the zone. If we were, and the zone being around 11,700, 11,800, we could, next stop would be 12,000, about 12,050. And the stop after that would be 12,450. So yeah, there's a lot of breaks between these or gaps between this resistance, which is again great news for the Dow Jones. And what would we be looking out for an exit signal? Just a crossing of the trend line and a little zigzag pattern down. Not too hard to check out. Anyone could check this out. Your son or daughter, even if they're in primary school, they could nail this stuff. Seriously, it's that simple. And really, I mean, that's the way you want to keep it. Now, last but not least, guys, because we've already checked out Asia, we've checked out the majority of the Western world, all we've got is the FTSE, which is in Europe. And again, this is actually a little bit more interesting because a couple of weeks ago, we called this single bar was basically what I personally call a doji. Again, there's many different names for it, and that's probably not the exact name, but that's what I like to call it, just for simplicity's sake. As you can see, it went up during the day. I'll just try and enlarge it a bit more. Here we go. Up during the day and closed well on its lows. Now, as you can see, what has that done? There's that blue line. That has provided resistance in the future. Now, all the other markets sort of resumed their uptrend for a tiny little while, until that China news came out, of course, which we already knew according to the China charts, didn't we? So that's pretty good. Cannot argue with that. But the FTSE, in the meantime, it did try to resume the uptrend, but that resistance of that doji bar, that single bar, it changed the markets on the FTSE, and it will actually continue to provide resistance in the future. That's really the level that we're looking for. And again, we've still got support at 5,800, so that's really the level that we want to be watching on the FTSE. We've had a little mini zigzag down, sort of, but not really. It's still higher peaks, but then this lower trough as well. So really would be wanting another zigzag down to confirm a short-term downtrend on the FTSE. Again, not rocket science, guys, but in the meantime, this resistance is going to be the one to watch, the place to watch. And again, did the FTSE meet its targets? Just really quickly, because what we were looking at from an Elliott Wave point of view, yeah, loving that. 6,040, that was the 61.8% extension of Wave 3. So again, guys, this stuff is so simple. When you get into it, it doesn't have to be complicated. You don't have to use complicated formulas. This stuff is simple and it's easy to get into. You've got to love it. And once you do, I mean, the charts just speak volumes, and it's great to get into this stuff, guys. Seriously. Loving it. Until then, guys, happy trending, and I will see you next week. Bye for now.